What's up? Merry Christmas from your favorite Jew. I had a long 3 hours with the family and I want to take a 20-minute break. So I'm going to do a quick YouTube. Well, it's not quick at all, I guess. It might be 20, 30 minutes long when I'm all said and done to talk a little bit about my old names, but I have two new names that are very half baked, uh, imminent catalysts that are very liquid, and I put them on Monday and Tuesday and yesterday. So I thought I would discuss them. Why don't we start with a recap on the names you know? Not much has changed since the last time I did a YouTube. Forward still remains my favorite idea. I am incredibly enthused that we'll get a deal in the next, by the end of January, I think. If we don't get a deal, I think the stock's going to be much higher anyway. I, I can't really recall a time where I've had a setup where you have the business inflecting with a ton of debt and leverage on it and operating leverage in the business in general. And then you're also at the very end of a sales process with all the management and board of directors and major shareholders aligned with you. So you really have the two paths. The one path is a private equity or strategic buyout. And I think I've ran through those numbers many times on how a strategic can pay as much as $50 a share and still haven't be massively accretive on an EBITDA basis, blended EBITDA multiple from what they're trading at. And it also works obviously in an LBO at 10 or even 11 times trough EBITDA. So if that path happens, great. We get 35 to $45 a share. If the other path happens, which is there's no deal, but we have an inflection in EBITDA, and EBITDA goes, let's say, from 8 million a quarter to 85 million when they report Q4, or maybe we have to wait till Q1 to see a number like that. I think you'll see the stock go up 20-25% overnight on that EBITDA print. There's just so much operating leverage in the business, and there's so much debt leverage on the company that's the result you're going to get, because the company's only trading at 9 times EBITDA right now. And if you look historically, Forward Air traded usually between 10 and 12 times EBITDA before it bought Omni. The average is like 10 and a half over the last 15 years. And Omni was purchased for 18 times EBITDA. So the blended multiple of those two, once you get this merger and the messiness of the merger behind it, you should have a company that trades north of 10 times EBITDA, more likely 11 or 12 or 13 times EBITDA. And if you use a modest EBITDA number for 2026, I think it should be well north of 350 million versus the 310 million they're run rating at right now, and they haven't even printed quarter four yet. So quarter four might end up being 5 million more than quarter three. So the run rate will be 330 coming out of quarter four. So 350 seems extremely achievable to me based on the turn in the trucking business and the cycle. That gets you to a over $50 stock price using, I think it was 11 times 350 for next year's numbers. So it remains my biggest position. It's over a 50% position, mixed of common and call spreads. Most of them are March and beyond. I love it. I love it. So YEXT, I am less excited about, though that also is a gigantic position. That's something like a 30% position still. The only reason why I'm less excited about YEXT is it's not something that I see working unless we get our sale, right? If we don't get the management buyout, if we don't get a private equity firm to buy this, the stock will definitely linger for a very long time before it recovers, right? We're not seeing any growth in that business on the top line basis. The reason why we have a lot of profitability now is because there's been huge cost cuts. So I don't like the situation there. If we get a break, that's the one I'm much more nervous about, and I want to see a deal signed so that it gets off my books. With Forward, I truly believe what I'm saying to you is that if we don't get a deal there, I think the stock will end up being higher than it would with a deal. It just might take a few months. I don't think it's going to take years. I think it might just take till March or April for Forward to be a $40 or $50 stock. So that's the difference between the two. The reason why people might prefer YEXT to Forward, or why in some ways it's more conservative, is that there's no debt on YEXT, and it's a very boring, high net retention rate, free cash flowing business that's not going away or anything like that. despite what AI worries people might have. So while YEXT might go to 6 or 650 or 7 in a break, you don't have any kind of existential risk with YEXT because Forward has so much debt. If there was a downward turn, additional downward turn in the trucking business, and that 300 million of EBITDA goes to 200 or 250, you could have the equity wiped out. And that's why that's quite frankly why the opportunity exists in Forward, is because of that. I also think Forward is being punished right now because of its process. And people think private equity is only going to pay $28, $30, $32 a share. So the stock's kind of hung out at $25, $26 right now. And I think the market's getting it all wrong. And we'll see what happens when we finally either get a break or a deal. I still think it's 85% likely we get a deal. I couldn't tell you if it's private equity or strategic, but it's almost unheard of that we wouldn't have a break or a deal by Q4 earnings, which I think is at the end of February or the first week of March. But I would think we have something in the next by the end of January, right? This has gone on a very, very long time, and I don't think it's going to linger beyond the end of January. It could happen imminently. I'll remind you, there's $1.5 million bonus pool that was paid out at the very beginning of January to all management except the top 3 people. And in the filing, it basically says that bonus pool is only paid out with certain events and conclusions to the strategic process. So they didn't do that with the assumption that this is going to break. They did that with the assumption that they have to keep these people around to then get paid in a sale. It's just that simple. So as of the beginning of November, the process was very much alive, and I think that's a disconnect. I think that's enough for Forward and YEXT. What other big names do I want to talk about? ABVX. I've stopped selling covered calls on that. That all worked in December, and there's now just been a few articles in a French newspaper about Eli Lilly and talking to the French government. And I don't know whether it's true or not. It's definitely more likely to be true now than it was when it was just an airplane that people were following. My position is about a 14% position that goes all the way back to before the data in July. I've just had that core position. I made it bigger in the last 4 weeks when I was doing cover calls on it, but those are all gone now. So I've sold about a third of my position. I've sold calls for January, and the other 2/3 is naked. And we'll see what happens there. I still think there won't be a deal there until after maintenance data, but I'm not willing to place a bet one way or the other there. Okay, so my 2 new ideas. A lot of you probably are familiar with them. One of them is DBRG, Digital Bridge. The story here is pretty simple. This is a $100 billion private equity infrastructure firm, and they were rumored to be for sale by not one of the major publications, I don't think. It was a second-tier publication back in April or May of this year, and nothing came of it. Where we are now is there was an article in Bloomberg early December, 4th or 5th or something, that said that they were in talks to sell themselves to SoftBank with no price. And then the same day, Reuters came out with an article that confirmed it, that said they're hoping to do a deal by the end of the year. And Bloomberg said it was within weeks. So both kind of screamed kind of advanced, obviously, by the end of the year, December 5th. But what really got me interested was about 6 days later, Bloomberg came out with an article saying that SoftBank was interested in purchasing Switch, which is a $50 billion data infrastructure company. And Digital Bridge is the private equity co-sponsor of Switch. In that article, they say that they reported on SoftBank being in advanced talks to buy Digital Bridge a week earlier. What's interesting to me about that is the word advanced was not in that Bloomberg article a week earlier. So there was a subtle way of saying that it had progressed a week later. That was like 12 days ago, maybe. The stock has drifted down a little bit because this is what always happens when people think things are going to happen imminently. You look at CWAN, which worked, Ching, that basically took about the amount of time I thought it would take. That was, a deal was weeks away. I don't think it was within weeks. And that took about a month, maybe 5 weeks from when they put the article out. The part that's tricky with Digital Bridge is what is it worth? So some people think it's worth as much as $30 or $35 a share. That's not going to happen. it was trading in the 9.50 to $10 before the first article, but it was as much as 12, 13, a month or 2 months earlier. I have to think that it'll be a pretty substantial premium because these big public private equity firms trade at big discounts to NAV. It's kind of similar to what POYM was like because people just assume they're just going to be run for the management team and they're never going to get fair value in the public markets. I couldn't tell you what this is worth. I think it's worth north of here. I've seen anything, like I said, from JP Morgan analyst has a $25 to $35 fair value. A buddy of mine thinks it's worth, $19 to $21. One interesting tidbit here is that if Switch is worth 50 billion, then Digital Bridge carry on that amount, if it gets sold for 50 billion to SoftBank, is worth a ton of money, many dollars a share to Digital Bridge. So that's money that SoftBank recoups by buying them now, in conjunction or before, they buy Switch. The bottom line is I think it's overwhelmingly likely that Digital Bridge gets sold. I'm not even sure 9 or 10 is the price it would go to if it didn't get sold, since we know now from the article in April and May, and now this thing with SoftBank, that the management team is definitely open to a sale at the right price. And there's many different people that could buy this. If I use my break, maybe more like 11, it's, 250 down and it's anywhere from 250 to 5 up kind of thing, maybe even 750 up. And I kind of have it at an 80% chance of a deal, um, you know, really in the next 2 weeks. I think it'll happen by Jan Apex. Obviously, Reuters said within the month, by the end of the month. Um, so anyway, that's DBRG. Maybe we'll get a deal tomorrow, and this is all stupid. The other one is way, way more sketchy. The other one is ZIM, which is an Israeli shipping company. And look, this one's really half baked. So, do your own due diligence on this. This breaks all my rules. I don't usually do shipping and I don't usually do foreign companies. This one's listed in the US and an IPO in the US. To give you a very brief background here, this is a very high cash flowing shipping company that has a ton of cash on its balance sheet, but also a ton of debt, and a lot of that debt is against their borrowed against for their boats. So it's pretty hard to come up with what the EV here is or what the earnings power is or any of that kind of stuff. So I'm just going to go very high level. The very high level is there was an article in August that said the CEO and a few other people in the management team submitted an offer of $20 a share to acquire the company. There's also activists here. You fast forward to November, and the company put out a press release. In August, they put out a press release saying they do not comment on rumors. In November, they put out a press release acknowledging the bid from the CEO. They did not say what the bid price was. They said they've also received multiple proposals from strategics in addition to the bid from the CEO, and they will not comment again until there's a deal or the process breaks. About a week ago, they issued a press release saying they've reached a deal with the activists and they're going to put 2 activists on the board. The shareholder meeting is tomorrow, so Friday. And that eliminated the proxy campaign. And then finally, where I got interested was 3 days ago, they put out a press release saying that they've received competing proposals from strategic, competitive proposals from strategic, and they have rejected a revised management buyout offer, and that they are in the advanced stages of the process, and they won't comment again if until they have a deal or something else happens. I strongly, obviously, encourage you to read every line of the press release from 2 days ago and pair it side by side with the press release from early November. I think there are some very important distinctions between these 2 press releases and why I think a deal is going to happen and it's imminent and it's going to go for a lot of money. I will give you the biggest risk here in a second, but let me just compare these press releases. So the first thing is that they rejected the management buyout, right, without giving you a price, and they told you it was a revised bid. Okay, so the original bid was rumored to be $20, and I do believe it was $20 based on where the stock was trading in August and July, and based on I don't think the number was made up in the articles that gave a $20 price point. We know there was a management bid. So if it was revised obviously north of $20. Come up with your number. It wasn't 21 and it wasn't 21.50. Was it 22? Was it 23? Was it 24? Who knows? Okay. But I wasn't 21 or 21.50. They said that it substantially undervalues the company. That's what they said. It substantially undervalues the company. Okay. Simultaneously, in that press release, they said they had multiple competitive proposals from strategic, more than one. Okay. You can't have both those things be true unless the competitive proposals from strategic are well north of whatever the bid was by management that was rejected. So you come up with your number. If the management number was 22.50 and that was substantially undervaluing the company, how much higher do you have to be than 22.50 to get a competitive proposal that they're willing to consider? Is it 25? Probably not, right? It's probably north of 25. I don't think there's a big difference between 25 and 22.50. 22.50 doesn't substantially undervalue something that's worth 25. 30 would be the kind of ballpark area if 22.50 substantially undervalues. And I do think these bids are as much as $30 a share. I think that because there's $25 of cash in the balance sheet that I think is kind of unencumbered, the way that the balance sheet works with the debt being tied to the ships. And the company also trades at, I think, a substantial EV/EBITDA discount to its competitors. So I think it makes sense and pretty easy for them to be able to pay $30 a share. Okay, there has to be a rub, right? What's the rub? Okay, the first rub is that the Israeli government owns a golden share here. And the golden share means they can block any deal if they wanted to. Okay, I will note that so far the Israeli government has not said a single thing about this and put up any kind of fuss about the process or the articles or the rumors or anything like that. The union has. The union says they want no sale to anybody but an Israeli or an Israeli company. And as we know right now, based on the articles that have come out by a pretty reputable news site that's not American, it's an international company, international website, there were three major shipping companies that were bidding for it, and one's out, and there's only two left. And one's a German company, and one is a Greek company, I think. And Germany is a very big ally of Israel. So the article basically said it'd be very difficult for Israel to block a German shipping company from buying one of their businesses because they need Germany right now. So I don't have a good read on the politics of this. I will say that based on that press release last week and based on the fact that they've been doing this now for at least 5 weeks publicly, I don't think the company behind the scenes is getting pushback from regulatory agencies or from government, or else I don't think we would have had the words like we had in this press release from a few days ago. If I'm wrong, what happens? There's probably two paths here that could happen, okay? One would be a substantial return of capital, which possibly could be subject to withholding tax if you're American. So I don't know what that would do to the stock price. You could always, of course, sell the stock before you get your return of capital, and non-Americans can buy it and not necessarily have the withholding. So I don't know what that would do to the stock price pre the distribution. And when I mean a return of capital, I mean like a major return of capital, $10, $15 a share. Okay, the stock will not go down, I don't think, on a $10 or $15 return of capital when it's trading at $21, and it has this ridiculous high free cash flowing machine behind it. Okay, the second thing that would probably be more likely would be they would get an Israeli company, or Israeli buyout team to take it private. Maybe the management team comes back with a better bid, and the management team ends up taking it private. There would be no regulatory problems with that because they already control it now, and there wouldn't be a problem with the union. One way or another, the odds that nothing happens is, I think, virtually nil, right? They have the balance sheet to return a ton of capital. They're at the very end stages of a sale process. If you read the article that came out, it said that the two binding bids by both of the shipping companies have already been received, and there might be one more week of bids, either competitive against each other or independent. But they're very far along in this process. So it would probably take a government agency coming out and saying you cannot sell this to a German company for this to end, I think, without a sale. That's just my read on it. There's no blocking stake by the CEO. There's no kind of controlling shareholder here. So it's really just whether the board does the right thing, and all signs are pointing to that they are going to do the right thing. They just put two activists on the board, and the activists join, I think, tomorrow after the shareholder meeting. So the way I look at this is it's trading at $21. It's a very shitty company or business, industry, whatever you want to call it. I don't really know what my downside is here. It's not to me 12, 13, $14 because I don't really see a situation where nothing happens, right? I see a substantial dividend or I see a sale. So for me, maybe the downside is 16 to 18 if they do a 5 or 7 or $8 dividend and not a 10 to $20 dividend in the worst outcome. Um, so let's use 17. That's 4 down. And on the upside, I really don't see a sale that's under high 20s. Now it might trade at a pretty big discount if you have a German buyer or this Greek buyer because people are worried the government's going to block it. But even if it trades at a 15% spread, you should get to a $25 stock price on a press release of a deal if what I'm saying is right, which I think it'll be a $30 deal. So that's kind of how I'm looking at it. I like spreads. There's February 23, 25s you could put on for like 58 to 60 cents. There's also January 22 and a half 25s. Because of the discount you might have to it, because of the government risk, you'll need a deal north of 28 probably to have those spreads be fully in the money. Um, I acknowledge there's some risk there, but like I said, I think if there is a deal, it'll be a really strong deal at a high price point. Um, so I guess what I would say is I think it's 4 up to 25 with the spread, and kind of 4 or 5 down, and that 4 or 5 down wouldn't be as a result of a large dividend. It would be as a result of kind of a smaller dividend, and I think there's probably I think there's probably a 90% chance you either get a sale or a very large dividend here. But I think it's much more like you get a sale. And the reason why I think that is if you read that press release, they're not kind of highlighting a return of capital opportunity. They're highlighting this very competitive sales process they're having. And I don't know why they would have rejected the management bid in that press release versus just rejecting the entire sales process in that press release and saying that they're going to do a return of capital. They do have the vote tomorrow for the board of directors, and obviously, they want to get their slate voted in. I think it would be insane if they went and had the vote, and then next week they tell you they've canceled the process. I don't think that's going to happen. I don't know what they gain from that, especially with the activist on the board, and I don't think that's what their intent is based on them rejecting the management buyout a few days ago. Right? They could have just said we're in a competitive process. Our goal is to maximize shareholder value, and we're going to we'll announce the results when the time comes. But no, they told us that the revised management bid has been rejected. So I don't necessarily think the management team is out of it either, by the way. They can come back with a better bid with less regulatory risk. And the company might be using the bids by the competitors to get the management bid up so that they have a clear and easy pathway through with regulatory. And if the management team buys it, it would trade at a much lower spread, right? Because there's really no government risk of a close. All right, those are my ideas. I hope you guys liked them. I have to first find where I am here. Oh, there I am. Anyway, hope everyone has a very Merry Christmas from your favorite Jew. And Happy New Year if I don't speak to you. But I'll probably try to do a YouTube at the end of the year doing a recap and then talking a little bit about how I'm going to approach this in 2026 because I might do things a little differently next year. All right. Take care, everybody.